Good morning. Welcome to Stock Market Today. It's Tuesday, August 25th, 2020, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter, as always, at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get a lot of the content for this show. Also give you daily stock ideas to consider. Those hit your inbox every trading day before the market opens. So U.S. equities finished higher in Monday's trading, closing near the best levels of the day. Another record for the S&P and the NASDAQ. Data points relating to COVID and the prospects for treatment/vaccine bolstered sentiment in the marketplace. Energy and financials led the way. Healthcare was the only sector lower on the day. Treasuries were mostly weaker. The dollar was stronger on the major crosses. Gold finished down 40 basis points. WTI crude was up 70 basis points. At the sector level, as we said, energy fins, followed by industrials and materials were your leadership. Healthcare, REITs, and staples were your laggards. And as we get to the desk this morning, futures are up about 0.5% after Asian markets were mostly higher overnight, led by South Korea and Japan. European markets are seeing solid gains and treasuries are weaker across the curve. The dollar is stronger against the yen, but weaker against the euro and sterling. Gold down 40 bips, and WTI crude is off 10 basis points to kick us off on a Tuesday morning that follows a Monday trading day that saw the S&P 500 potentially leave a breakaway gap on the chart. That was actually a gap higher through the 3,400 level yesterday morning, and that gap does remain open. I've given you the top side breakout here. So essentially the thesis that we've been highlighting on this call, in this show, in my notes, everywhere basically, has played out. The S&P 500 has gone to new highs, right? Led there by growth and momentum. Okay, the Qs are well beyond the February highs at this point. So if we start to think about where pullbacks could go, 3,200 to 3,300 support, which we raised this week. Below that, 3,000 to 3,100. We are trading at record highs right now and trading higher here this morning. So there is no price-based resistance per se. We can start to get into extensions off of here, and there are plenty who do that work. I've done that work also, and you can get to actually some pretty big numbers for the S&P just by taking some standard Fibonacci extensions off of this move with this breakout now. So just something to keep in mind. I know that there's a lot of bearish sentiment in the marketplace, but the bull case can be made, and it can be made in a compelling fashion. Now, we are overbought in the near term, right? It's not to say we're going to go up in a straight line, right? We are overbought in the near term, backfill, right? Opportunities, rotation, etc., all going to play out. Chaikin money flow is still strongly bullish, right? So that's a sign of accumulation. So nothing really changing. Staying the course, sticking with a bullish leaning while identifying the relative strength, right? And also being aware, just being aware of what's out there. Right? Risk management is always paramount. So what are we talking about today in our note hour market in a minute? SPY and Qs trade at new all-time highs. Industrials continue to show promise and relative improvement. Now, I started talking about that 2 weeks ago before I went on vacation, and the theme persists. It's not running away from us, which some might say, I'd almost like to see it run away from us, but it's compelling and it's playing out. So it's something that I want to keep an eye on. Momentum regains relative momentum, and there are actually 3 buy signals in the MTUM ETF today in Chaikin Analytics. So those of you who get my note, if you're a subscriber, if you've taken the free trial, you'll see what those 3 names were. Bond proxies in the equity landscape continue to weaken. That's REITs and utilities on a relative basis. And as I said, futures do point to a higher open here today. So shifting over to the power bars for the major indices, the Dow was your outperformer yesterday, up 1.4%, 12 to 2 bulls to bears there. And we do the Dow does have a shakeup. We've all seen the news. My pushback to that is, yes, we all pay attention to the Dow, but at the end of the day, it's 30 stocks to which very few, if any, professional money managers are benchmarked. So it's interesting, but I kind of give it a shrug and a who cares. but people pay attention. So S&P 500 up 1%, 167 to 59, bulls to bears there. NASDAQ 9-1 in favor of the bulls, 36-4. But was an underperformer yesterday. Small caps were in line, 667 to 277, bulls to bears there. Bonds down tick, back up yields. Energy, your best performing sector yesterday, up 2.75%. And energy actually has a bullish power bar ratio. Can't believe I'm saying that. The trend still not great. Some signs of stabilization on a relative basis, but the power bar ratio is there. So who am I to argue with it, right? This is take your emotions out of it, take your bias out of it. You know, I've been bearish energy. It was the right call for a very long time. It could potentially be changing. So we have to pay attention and not remain dogmatic. According to the Chaikin Power Bar, small cap stocks and large cap stocks remain bullish. Major markets are mixed. Now, in the industrials landscape, which is where I'm warming, one of the cyclical sectors to which I'm warming, our stock of the day, PACCAR, PCAR, very bullish, strong trend, strong industry group, machinery strong. I like this setup. Breakout, retest, a little flagging here. Very bullish stock, outperforming the market, is oversold with bullish money flow. I like those setups. It's in a group that's outperforming within a sector, as we'll see later, that is showing signs of relative strength. So I think if you're looking for potentially bullish ideas away from the standard who's who of what's been working, FanMag, the big tech, consumer-facing tech, etc. This is an interesting name here, PCAR. I'm highlighting it in my note. I'm highlighting in the show today. I'm actually highlighting it in 2 notes today. And I think it's pretty compelling as a bullish idea. Take a look at PCAR if you are looking for long ideas in the portfolio this week. PCAR, very bullish stock, featured in my notes today. Turning to the sector tracker now. The movement of the major sectors over the last 5 days, basically playing out the way we want to see it. Tech, top of the list, largest weight in the S&P 500, has the growth, has the momentum. It's been leadership. It continues to be leadership. It's been our favorite sector. So when it's at the top of the list, I feel like giving myself a little bit of a pat on the back, and kudos to you who have followed that trend and have gotten yourself paid. Comm services, another group on which we've been bullish and remain bullish. Discretionary. So you basically have your offensive leadership at the top of the list, which makes a ton of sense. But then we have the up-and-comers in the industrials and the materials, which are the 2 cyclical areas that I like the best. I've said this before, I'll say it again. I've talked about materials for probably a month and a half now. For the past 2 weeks, notwithstanding last week when I was out, industrials have jumped onto my radar screen, and I'm going to show you those here today. I actually showed them to you before I went away as well. So industrials kind of looking compelling to me. I just talked about PACCAR. We'll look at the group a little bit later on. Financials, I think you have to sit up and start to pay a little bit of attention as yields have backed up. Huge speech in Jackson Hole, or virtual Jackson Hole summit, from Fed Chairman Powell on Thursday. Could have an impact on the financials, so let's pay attention there. Healthcare a bit under pressure. We started talking about it in our note 2 weeks ago, the fresh breakdown on a relative basis. Energy is still at the bottom of the list, but again, I'm watching REITs and UTs. We'll look at those later, but your bond proxies have been somewhat ugly of late on a relative basis. So our industry in focus today is telecom services, which over the past 6 months has been an inline performer, right? Outperformed the S&P by 20 basis points, right? Let's call it inline. Power bar ratio, which looks at future potential, is strong. 14 bulls to 5 bears. Gets it to the middle of the road. 10 of 21 subsectors having moved up 1 slot over the past week. So if you're looking for some names there, TDS, telephone and data, very bullish. Netgear, NTGR, very bullish. And Consolidated Communications, CNSL, also very bullish. So you have 14 names to choose from, and an ETF that, in fairness, is not super liquid. Does have a bullish rating. There's your bullish ratio. Strong trend above the trend line. I don't love this dip in relative strength of late, but it's been a solid outperformer really since the market's lows in March. And what I see here is a breakout that's now retesting. What you want to see if you're looking at the ETF is a 75 level holding here right now. But more importantly, I just think it's kind of an interesting group to look at if you're looking for names that are kind of a little bit off the radar that could be interesting. So take a look at the 14 names that are bullish within that group for potential ideas. Let's dive in now to what's trending. The leaderboard pretty much has a common theme in American, Carnival, United, and Delta, all benefiting from the news about a potential vaccine as well as treatment as it relates to COVID-19. So those are, put them in your reopening basket, and they all traded well yesterday, up 9-10% respectively. WRK is a very bullish stock that was up almost 10%, for which I did not see any company-specific news on that front. Loser side of the board, a lot of healthcare here. The payers, right, the providers, I think that these stocks are going to trade with the polling numbers, in particular Joe Biden's polling numbers, Vice President Biden. If he's polling well, I think you're going to see these names come under pressure, the payers. So Centene and Humana under pressure as Vice President Biden has done well in the polls of late. AMCR, nothing company specific there. Same with Hologic and Market Access. No company specific news to drive trading in those names. So let's talk about it. Here's the industrials on a relative basis in the main chart. XLI relative to SPY, right? Steady downtrend, accelerated into the COVID bottom, and then followed through. But now what I see is some basing activity, right? You can call this an ascending triangle if you're into pattern work. We are still below the 200-day moving average, right? So in the near term, I think what you're playing for are these interim highs at the 200-day moving average, where we can start to think about what happens next. But this is definitely a base forming. And as I look at it, it's kind of interesting because the RSI of the ratio has started to put in a series of higher lows and is now holding bullish ranges, while on an absolute basis, XLI is breaking topside through those June highs. So that's really interesting to me. That's why I'm kind of looking at it. Now, you want to drill down within the group, right? Machinery is doing well. Transports, especially road and rail, are interesting areas to take a look at. We've highlighted a name like Cummins. You want to look at some of the truckers and the rail stocks as well as potential ideas to drill down and do some work. So that's really interesting to me, something I'm going to be keeping an eye on here in the near term. Bond proxies, terrible trends. Let's take a look at XLU in the top chart relative to SPY. Just a precipitous decline under the 200-day moving average. The one bright spot is we're kind of getting down to the lows of 2018 there in October 2018. Look all the way to the left of the chart. Maybe we see some support there, but that's ugly. It's been ugly. We've been highlighting how ugly they are for a while now in our notes. So, for those of you who read my notes, you probably haven't gone anywhere near these names, which is good. And as bad as the utilities look, REITs look worse. Take a look at the bottom of the chart. XLRE relative to the SPY breaking below its 2018 lows from October 2018. So trading below 2-year lows and just continuing to trend down. So the bond proxies are under pressure, which is interesting. Playing out as yields have backed up, but really started long before the yields started backing up. They've just been ugly trends for a while. Hopefully you've been nowhere near them. If you've been reading my notes on every Tuesday, you know that you have not been anywhere near them. And then finally, momentum regains relative momentum. Here's MTUM. On an absolute basis, breaks topside and continues higher. New 52-week high yesterday. Confirmed by momentum with the RSI in bullish ranges. While on a relative basis, we have a topside breakout. Maybe a little bit of a retest is in order, but the trend shifting back to the top side. So as I said, there are actually 3 names in that group that triggered signals today. Take a look at my note for those. That'll wrap us up. Take us for a test drive. I'm back at you tomorrow.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.